IUL, Index Universal Life, as you guys know. Now, if you're on this Zoom, obviously you know what an IUL is, or maybe you have an idea of what it is, but you're just here to learn more. In this business, the more we learn is the more we're gonna earn. And I cannot tell you, I feel like in my 6 years being in this business, like I just can't stop learning, right? And the more I learn is the more I want to share, and hence why I do these webinars, because as I learn something, I want everybody to know about it. So I am the proud author of 4 books. First one, if you ain't stacking, you're dropping your coins. We don't want to do that, right? The second one, this is why you're broke, right? Because we got to know what we're doing, and that's really not helping us, right? And then the third one is a journal, Let's Get Rich, right? So first we're gonna go through all of this, and Let's Get Rich is really about saving, budgeting, really helping us with our day-to-day finance. And then my fourth one, which is amazing, and you guys know because you've been flying it off the shelf, Playground Millionaire. And let me backtrack and let you guys know, how did Playground Millionaire come about? As you guys know, I sit with a lot of clients every day, and most adults, when you try to help them with their finance, the first thing they want to tell us is, I'm good. Can you guys relate? I'm good, right? But when you talk to them about, hey, let me show you how to save for your kids. Let me show you how to set your kids up to be a millionaire in their lifetime. Now they're willing to listen. They're open to, what are you talking about? Tell me more, right? So I realized that when I talk to people about their kids, they're giving me the attention to share this information. Otherwise, for the most other part, they're just going to, I'm good. Guys, if you could please mute your line, right? So I also teach, I'm a professor at St. John University, Kingsborough Community College, and I do a lot of speaking engagement at public schools. And because I do a lot of these speaking engagements, especially around like April, May, we do a lot of career sessions. I go to different schools, and when I talk to the kids, I'm always hearing the kids want to spend, which is probably okay because they're young. They don't know any better. And one of the teacher at the public school said to me, Odetta, you're so good with this stuff. Have you ever thought about writing a kid book? And I said, well, I thought about it, but just never really happened. She's like, Odetta, you should go for it. I kid you guys not. I came home that night, and because I've been doing this for 6 years, I already have a lot of content. I already have a lot of data. As you guys know, I'm very social in social media. So I already had a lot of data. It was just a matter of, writing the book and putting the pieces together. So Playground Millionaire really came about as a result of 2 things. Me approaching parents to get help for themselves, and them telling me I'm good, or I have to run behind them, versus when I say, hey, let me show you how to set your little one up to be a millionaire. Let me show you how to set your little one to graduate school with no student loan, have money for a house, have money for a car, and set up their whole life. Now they're listening. Now they want to hear more. Now they want to talk to me. And so with that, along with being in the classroom, seeing how these kids are already talking about only spend, and then the teachers in the classroom also telling me, hey, this is something our school need. Like, these kids need to know about finance, and the parents also need to know what they can do for their kids. Hence, Playground Millionaire started. It's been doing amazingly well. God is good, so I have to give him all the glory, because he made me hungry for this stuff, and I have an appetite for this stuff, and I love it. So tonight, I'm going to share with you, and if you're an agent, this is really going to help you. 25 benefits to IUL. I can tell you, when I first started 6 years ago, all I knew is that this is a good thing. We got to save our money in it. It's tax free and we never lose. That was the only thing I knew. We saving in this thing. It's good. You're never going to lose money, and it's good, right? But over the years, I do a lot of personal development. I do a lot of studying. A lot of times when most people are sleeping at night, I'm up studying. Maybe that's the professor side of me. So I'm going to share my screen, and we're going to go through what is that like. So I want to open up with a question first. When it comes to an IUL, what are the top 3 most important things you guys think or as a parent, what are the top 3 things or reasons that you would want to get an IUL for? Whether it's for yourself or for your kids. What are the top 3 things? And you could put it in the chat because I muted all the line. So put it in the chat. What are the top 3 things when it comes to an IUL? Why would someone get an IUL? Why would they get an IUL? Okay, so I'm seeing tax-free growth, yes. Flexible, be your own bank, tax-free benefit, cash value retirement, tax-free advantage, building cash, accumulation, all true. Low loan and loan interest rate. No max, oh man, you guys, I love it. No max like a 403, I love it. An IRA, tax benefit, debt benefit, so true, right? So true. So again, tonight we're going to show you guys why people really need to see. At the end of the day, we're just educating them, right? And once we educate people and they understand, it's a no-brainer. It really is a no-brainer. It sells itself, right? It sells itself. So when it comes to our money, there's 3 major threats. 3. The first major threat is inflation. And you don't have to put this in the chat, but we all know, right? So inflation, which is cost of living. Do you guys think, well, yeah, you can put it in chat. Do you guys think cost of living is going to increase as we get longer, or things are going to get cheaper? Are things going to get cheaper, or they're going to get more expensive? Are they going to increase? Well, that's kind of like a no-brainer question, right? So put it in the chat. Are things going to be more expensive or cheaper? Is it going to increase? Is it going to decrease? Absolutely, it's going to increase, right? And that's the first major threat to our money, inflation. We cannot control it. It's going to increase. The second major threat is stock market volatility. Stock market volatility. We all know the market goes up, the market come down. That's how it operates, right? So will it go down? Of course it's going to go down, right? We don't have to guess. Just go look at your accounts. Go look at your 401k, your IRA, your 457, your 403b. Just go look at it. In fact, that's one of the reasons why I started with WFG, because when I was in corporate America, I was one of those employees that would stack away my 401k. Save. I was maxing it out. And when the stock market dropped, because I'm a saver, I was always looking at my account statement because I'm a saver. And when I see it drop, I would always call Jason, who was the guy at Wachovia managing our 401k. I said, Jason, I lost a lot of money. And he would always try to reassure me, Odetta, you're young. Don't worry, it's going to come back up. Well, I did not like the idea of losing, so I was not okay with hearing I'm young. It's gonna come back up, because I'm thinking if this is gonna keep happening throughout my entire lifetime, I'm gonna be 60s and still losing, right? So that's the second threat. The third threat to our money is taxes. Do we think taxes gonna go up or down? Well, I've made it very simple for you. The usdebtclock.org, you can Google it. There is more red than green. The country as a whole is in more debt than we have revenue coming in. So taxes 100% have to go up. It's a no-brainer, right? So because these 3 things are going to affect our money, right there, I'm giving you 3 reasons why everybody needs an IUL. To keep up with inflation, stock market risk, never losing money, right? Taxes are going to increase. We can't do anything about that, right? Just go to the US debt clock. So with those 3 things, what we cannot control, we have to insure. I'm going to say that again. What we cannot control, we must insure in an IUL. IUL is going to beat inflation because the interest is higher. IUL, you never lose money when the stock market go down. IUL is tax free. Save, 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 save. In the future, 100% tax free. So because a lot of us are also agents, IUL is not about finding new money. For some clients who are already saving, get familiar with this word, reposition. We're simply educating our clients to reposition the same money that they're already saving. They're just saving it in the wrong bucket. So we're going to reposition their money, if they're saving in a 401k, 403b, IRA, bank, whatever. We're repositioning the money from one pocket that has holes. And what are those holes? Tax for sure. They're going to pay a whole bunch of tax in the future. And we're also going to avoid stock market downturn, stock market volatility, stock market risk, right? So we're repositioning. And when I sit with clients and they say, well, Odetta, I can't afford to save anything else. I'm like, no. We are not, this is not what we're doing. We already did our due diligence. We did a PFS or FNA, and we see, or you told me that you're maxing out your 401k, or you're putting money in your 401k, you're putting money in the bank, you're putting money in your 457, you're putting money in a 529, you're putting money in a 403b, 457, you're putting money, you're saving money already. So my job, once I'm done educating you, is to reposition that money from this pocket that has these three threads and put it in a pocket that has no holes. No holes, right? We're repositioning the money. So that was just some like intro. But now let's talk about these 25 benefits. Number one, and guys, a lot of people don't even know this. This is why you got to stay learning. That's why you got to stay learning. The more you learn, the more you earn. The number one, let's go with the number one, right? Tax-free debt benefit. All life insurance is tax-free, the debt benefit, right? IRS code 101A. I didn't make it up. It's in the IRS. They're the one that created this code. But you know what? They're not going to tell everybody. Because if everybody knows it, everybody's going to go get a life insurance because it's tax-free. And as long as we don't know, they making money. So that's the first benefit. It is a tax-free debt benefit, IRS code 101A. Second benefit, tax-free gains on your money. So now let me break this down even further. You may have a 401k, you may have a 403b, you may have an IRA, you may have money in the bank. Did you know that the growth on that money, the gains, the capital gains, all the growth, right? So let's say you started off with 100,000 and then it grew to 200,000. You're going to have to pay tax on the growth, right? But with life insurance, that growth, that gains is 100% tax-free. IRS code 72E. Google these codes, right? Number three, tax-free loans. Now, where on earth can we get this? Tax-free loans. Tax-free loans. So IRS code 7702. So now when you and I are retired and we got a nice nest egg in our IUL, $1 million plus in cash, $5 million plus in cash, or whatever the cash value grew to, we're going to take all of that out to live off of retirement supplemental income, tax-free. IRS code 7702. Okay? We can't make this stuff up. And that's why the government, you'll never see an advertisement with IUL. You'll never ever see a commercial Because as long as the mass don't know, they're winning the money game. And this is why we do these webinars. Benefit number 4, tax-free retirement income. So why are we putting money in a 401k again? To grow. And then when we're 65 or 70 or whatever is your retirement age, we pay a whole bunch of tax on that money? Why? Because we don't know, right? So I'm going to ask you the question, do you want to pay tax on the seed or you want to pay tax on the harvest? You're a farmer. You went to buy some seeds. Do you want to pay tax on that little bitty seed today? Or you want to say, you know what, farmer or whoever's the store owner, when my mango trees blossom into this huge field and I'm ready to sell these mangoes and all these acre lands of mango tree, I'll pay you tax on all of the mangoes that I sell. Like, who would do that? But that's what most people are doing. That's what 90% of America is doing. Because again, nobody ever sat with us and educated us. That's IRS code 7702, right? You're taking money out of your cash value tax-free. And y'all know, if you come in a lot of my webinars, you know what I say, tax-free money means more money. Because if you have $1 million and that $1 million was not taxed, how much do you get to keep? How much do you really have? If you don't know how much Uncle Sam is going to tax it, is he going to take 30%? Is he going to take 35%? Is he going to take 40, 50? You don't know. You cannot control your future not knowing how much money you get to keep, right? So even though everybody is saving money in these accounts, how much are you going to get to keep? How much of that money is going to go into your pocket? How much do you get to control or decide how much you get to keep is the bigger question we should be asking people with their 401k, 403b. It's great that you have all this money in your account, but how much do you actually get to keep if you don't know how much you're going to pay in taxes? Number 5, now let's go into some more benefits. Long-term care. Listen, you ain't got to ask me. Google the stats. How many people are getting sick? An IUL, you could have a long-term care rider. An IUL, you could have a terminal illness rider. In fact, all life insurance automatically comes with a terminal illness rider. What does that mean, Odetta? Well, the doctor said you're going to die in 4 months, 6 months, 3 months, 12 months. You're going to die. Like, they put an expiration on when you're going to die. Usually in a couple of months. Now you can accelerate 100% of your dead benefit. So if you were insured for $500,000, $500,000 you could start spending on yourself while you're alive. What are your last wishes? If you know you're gonna die, I don't know, in 4 months, I want to do everything that I ever wanted to do. I want to go to Dubai. I want to go to Africa. I want to eat lobster every day. I want to drink, whatever you want to do, you do. So you can accelerate 100% the terminal illness. Because again, that's the diagnosis. You're going to die in a couple of months or whatever, right? Cancer is really a big one. Number 7, chronic illness rider. Again, these are all things that are added to an IUL, right? So what is a chronic illness? The doctor say you have a condition, right? That's going to last a year or more. That's why it's chronic. It's staying with you, right? It's going to last a year or more and you require ongoing medical attention. Or it might even limit your day-to-day activities. Guys, Google the stats. Right? There's a lot of sick people walking around. There's a lot of people on medication. There's a lot of people popping pills or doing whatever. No judgment. I'm just showing you that there's a need for what we do. There's a lot of non-healthy people, guys, that are walking around, right? They're not going to die no time soon, but they have a chronic illness that they have to continue on drugs or whatever. So that's your chronic illness rider. Then you have critical illness rider. So again, the doctor says you got cancer. So what now? You're not gonna die, but we got to do chemo. We got to do all these crazy things. Guys, the last thing anybody wants to do when they're diagnosed with a life-changing illness is worry about money. I don't want to worry about money if I get, God forbid, something happen to my health. I don't want to worry about money. I want to worry about seeing the best care, the best doctor, the best specialist, go wherever I need to go. Okay, I think that's probably Richard writing on my screen. Okay, you want to see the best, guys.
Sorry, Odetta. My apologies.
Okay, guys, you want to be able to see the best. So if you're sick, you don't need to be stressing about, oh my God, I got to get healthy. I'm worried about my health and also worrying about the finances. Not having your health is already enough to worry about. You don't need extra stuff. So when you have a critical illness rider, right, something happened to you, there's a video that I like to play, but I'm not going to play it now. Some of you that have been in my webinar, you've seen it, right? That talks about Natasha. Natasha was diagnosed with cancer. She didn't even have an IUL. She had a term with living benefit, and it helped her tremendously. And that was a term, but with living benefit, right? Imagine if she had an IUL with the living benefit and cash. So when you talk to clients and you ask them, hey, what do you have in place just in case something ever happened to your health? Nobody thinks about these things. No, they don't have a strategy in place, God forbid. Now, something may never ever happen, but I promise you guys, the longer we live and old age bless us, we're gonna need these things. The longer you and I live and God bless us with old age, 70, 80, 90, 100, and if we live longer, oh God, yeah, I don't know, right? We're gonna need those things then. We're gonna need it then, because most people are not gonna be 100% themselves to still do their day-to-day. Like people in their 60s and 70s are already popping pills, right? So I like to, and some of you that are nurses here, when someone like Dr. Fumble and his wife and all the medical people sit with their clients, they don't even stress so much the cash value. They stress on the living benefit. Because if you live in this nice life, you got a mortgage, you making money, you got a nice house, nice car, your kids are, everything is nice, and you get hit with a life-threatening disease, cancer, heart attack, stroke, the three major ones, that every 7 to 10 seconds someone is being diagnosed. Now you can't work anymore. How are we paying the mortgage? How are we paying all these other things that we were paying when we were gainfully employed, right? These are things we have to think of. Having a strategy with these riders is peace of mind. That whatever throws my way, I have peace of mind that I can weather the storm, right? We can weather the storm. So, number 9, money for medical bills, deductibles, copay, right? The number one reason for bankruptcy is medical bills. You can't work, those bills are going to stack up on you before you could even realize you're about to be homeless, right? So with an IUL, the cash value in that account, you can use it. Money for experimental or alternative medical treatment. Guys, this one is a big one for me. I've had personally a very good friend of mine. She's Guyanese, a much older lady than me. She was diagnosed with cancer. And within 3 months, she was gone. In 3 months. We did a GoFundMe for her. That was not enough. I had a conversation with her. She said, Odetta, we're trying to raise money because she didn't want to do chemo. She wanted to do experimental alternative treatment. She wanted to do alternative medical treatment. We tried doing a GoFundMe. She didn't have enough money. In 3 months, she was gone. So I know number 10 is a big one. I want options. I want everybody to have options. If something happened to our health and we want to try alternative treatment, we don't want to do the chemo, or we don't want to do whatever pharmaceutical companies and drugs are saying. We want to try experimental other stuff. Where's the money for that? Where's the money for that? Right? In 3 months, she was gone. And it hit me because I'm like, all because we didn't have the money to try alternative stuff. I mean, maybe she would have died eventually, but I feel like she went sooner because we didn't get to raise the money. It's sad. Number 11. Smearing my makeup now. Oh my God. Number 11, money for college, wedding, capital for business or anything, right? So the money that you're building in your IUL cash value can be used for anything. I have a client who wanted to do something for himself. He had the money, but guess what? The money was sitting in a brokerage account that he could not touch. Money in the IUL you could use for anything. My very own cousin, he's starting a business. He's going around asking everybody in the family to fund, help him with his business. When I hear stories like this is why I go hard for IUL. Because I know that life is going to happen. And when it does, when you have these type of strategies, you're in a better position. You have choices. 12, of course, the policy builds cash value that you can access while you're alive. Insurance got a bad rap many years ago in the early phases. Why? People would buy policies and it doesn't benefit them while they're alive. They're paying for something, and then when they die, somebody else gets the money, right? So with an IUL, it's the opposite. It's about you first while you're alive. That's why I got 3.5, because it's about me first, right? It's about me first. I get to spend all that money on me first. I get to make sure if I get sick, I got my living benefits, my long-term care. And yes, when I die, I want to bless my nieces and nephew. I want to bless their kids, right? It's a beautiful thing. It's you first with an IUL because of the cash value that you can use on yourself. 13, money to replace income. So let's say you lose your job, or maybe you went through a divorce and everything had to be split up, and maybe one spouse got more, I don't know, right? Or maybe you have a mortgage, and maybe you didn't have a fixed mortgage, you had a variable mortgage, and then every couple of years, either you refinance or your mortgage payment keep escalating. Then guess what? You could take money out of your IUL for these things. Because at any given moment, we could lose our job. I've been in corporate America where I lost my job several times. And that's when I realized, you know what? I can't have a company control my future. Like, how am I so educated, skilled, talented, making millions for these hotels, and I'm still finding myself out of a job every couple of years just because another hotel bought out my hotel, and then they were bringing their A team, and I got to go look for a job all over again. Well, thankfully, because I'm a saver, I always had 12 months and more saved up so I could take my time and job hunt. And now that I have an IUL, well, I'm not in a job anymore. I'm a business owner. But again, you have options, guys. You have freedom. You have flexibility that if life happens, if you lose your job, if you go through a divorce, if your mortgage payment escalates on you, you can access the money. right? You can access the money that's in the cash value. 14, greater upside potential. What does that mean, Odetta? Well, look at the average interest that an IUL is producing. On average, if some of you have been on previous webinar, you'll see the 20-year look back is about average 8%. Now, that's the last 20 years. We don't know what's going to be the next 20 years, right? So the interest that we're earning, not only it's compound. It's not simple. It's compound interest. It's interest upon interest upon interest. If you had that money in the bank, it's simple interest. So the interest is higher, and that's another way that we're keeping above inflation. Because there's some people that are going to save money, but if they're saving it in the bank, they're actually losing to inflation. 15, index strategy. So when people say, well, Odetta, how come I'm not going to lose money? Well, you're not losing money because these accounts are not, your money is not in the stock market. Your money is mirroring the index in the stock market, right? And so because it is mirroring, and this is a contract that the life insurance gives you and I that says we have a 0.75% floor. We're never ever going to lose money. We're always going to make money. Guarantee no loss, but better than guarantee no loss, you have a 0.75. So I spoke with a client today who said, well, Odetta, my other plan is giving me a 0%. But I'm like, well, okay, so 0%, that means you're not going to lose. So that's good, right? You have an IUL, 0, you're never going to lose. That's good. But over here, we're doing 0.75. So even when the market is negative, you're going to make money as opposed to not making anything. Pick up what I'm putting down, people. Do you want to always grow your money and still never lose? Or you only want to not lose? Dog, that's a no-brainer. Put in the chat. Do you want to not ever lose money and still make money? Or you just only don't want to lose? And the irony is we know that the stock market is going to go down. So when the stock market go down, you and I, we still chilling because we still making money, right? 0 is your hero, but even better when you're still making money in a down market. Number 16, lock in your previous gains. So I always like to give an example of a 401k. You have 100,000 in your 401k. The market dropped 40%, you're down now to 60,000. Okay, we got to wait for the market to come back up to get back to 100,000. But with your IUL, if you had 100,000 and the market dropped, and let's say this is a Transamerica product that has a 0.75, you still made money on top of your 100,000. So now your new account value is 100,075. It resets at the new account value. Guys, people don't know this, right? They don't know this. Now your 401k, if you're down to 60, then 60 is what you have. But with your IUL, you didn't lose a penny. You still got your 100,000 plus the 75,000, the $75. So now your new account value is $100,075. That's your new account value. It's no longer 100,000. You grew, right? And that's your new account value. Number 17, this is a permanent policy for your whole life. Guys, it cringes me when clients call me and they're in their 70s. They're in their 80s. And they're like, well, Odetta, I always had a policy my entire life. I have this particular lady in mind. She worked at Rockefeller Center. Really, really nice lady. Had a great career, right? She had a life insurance with her job. And most people don't know. This is why we do these webinars. If you have a job insurance, it's a job insurance, right? It's a job insurance, but don't let that be your end all be all, right? Because it may not go with you, And even if it does go, all these wonderful things I'm sharing with you doesn't come with your job insurance. It does not. It does not, right? So in this particular case, this lady had a job insurance while she was working. She's now retired. And she realized she didn't have a policy anymore. So she called me, and it cringed me to give her the price. Now, first of all, it's not an IUL. This was just a final expense, Everest. It cringed me to even tell her how much it's going to be because of her age, right? Or let's say you have somebody that has a term insurance, and term is a term. It's going to end when the term ends. So even if you take the longest term, which is 30 years, after 30 years, then what do you have? The insurance company is going to send you a nice letter stating your price that you were paying for the last 30 years. That's not what it is anymore. It's in the thousands, right? It's in the thousands. So what would people do when they're in their 60s and 70s? Of course, they're going to cancel it. Now they have no life insurance, and they don't have a death benefit, and they're not going to leave a legacy using life insurance. So with an IUL, you're covered for your entire duration of your life. Your whole life. You're good. You're in, right? Number 18, flexible premium. Say what? And this is why this is better than your whole life. A regular whole life, I've never, ever, ever put a client in a regular whole life. There's so many other differences, right? So with an IUL, you have flexible premium. If you settle that up, I'm going to do 500, and then, life happens. And then you call me, so that I can't do 500 no more. No worries, girl. We could reduce it, right? We could reduce it to your monthly no lapse. Or let's say you call me and say, girl, business is booming. I just got another job. I'm making more money. And because when I sat with you, you told me always be stacking this IUL. So I want to bump it up. From 500, I'm going to go to 600. You can increase it, right? It's flexible, right? Even the death benefit. Let's say you started out with 100,000. You could increase your death benefit. However, there's a caveat. You have to do within a certain amount of time. I think either 3 or 4 years. You can't do it today and then decide next month you want to increase it. It has to be within 3 or 4 years. Oh my God. And number 19, you can get an IUL as early as 2 weeks old. That's why you want to make sure you get your Playground Millionaire, so that every parent can read this and see, I need to get this for my little one. And you know what? If he becomes successful, he doesn't need to have all of this money. At the end of the day, it's my money. Or if he grows up and he doesn't want to listen to me, he doesn't want to go to school, he wants to smoke hookah, he didn't want to get a job, he just want to chase these girls and be a bum, all of it is my money, okay? You can start it as 2 weeks old, right? 2 weeks old. As soon as they get that social and they're healthy, call you guys and let's help that family protect themselves. Number 20. Ooh, this is a good one. This is a good one. Oh boy, I wish I was doing this business like 30 years ago. No social security impact. Guys, these old people that we see working at the Walmart, do we think they're working there because they want something to do? Or they're working there because they're trying to make ends meet? What do you think? 80%, put in the chat. Are they working there just for recreation? They want to get out of the house, they want to do something? Or are they working there to make ends meet? Well, first of all, if you just want to do something recreative, you could do a lot of pro bono work, you could do a lot of volunteer work, you could go hang out with your kids, grandkids, you could take trips. What do we think? Are they working there just for fun? I remember doing a financial workshop at Bronxville Community Center, and the person who got me the room, right, it's a free community center, They said, Odetta, you could come here, you could have the space, because the man who owned the building, he still has his name on the street. He was a big community activist. And this building, by the way, I know it has to be in a trust, because the only condition is that this building has to be to help the community. Free information to help the community. Nothing must be charged. So he said that the only condition, you could come here, you could do these workshops, we're going to give you the space for free. And we did that for about 3 months in Brownsville. The guy who helped me get the space, one day I sat with him and I said, you know what, since I'm always coming here and you were so nice to help me with this space, why don't we just do a free analysis? And he said, girl, we ain't got to do that. I said, why? He said, well, I ain't got no money. That's why I'm still working here. He was already retired a long time ago. So I'm thinking he's just here for, just to come out and do something. He's like, no, I'm still here because I need that extra income. I could not even help him with any strategy because he had no money. With what he was getting for his Social Security pension, and then the little that he was making running the center, that was it. That's why I do this business. It's so sad. Like, it's really sad. The more people you help, the more families the more stories you hear. If you care for people and you like helping people, you'll never quit this business. You'll never quit this business. No Social Security impact. So most people, they can't wait to turn 62. They can't wait to turn 62 because they want to start accessing their Social Security. Why? Why they doing that? Why they want to start taking out this money right now? Why? Put it in the chat. Why? Why they can't wait to start accessing Social Security? Even though they know that if they delay taking Security, the longer they take that money, they're going to have access to more money. Somebody said tired working. That's true. That's true. That's true. Some of us are tired working. We want to retire now. Right? But honestly, yes, we're tired working, but we could take a break. We could go on vacation. We could take a day off. We could take a long weekend. But guys, if you Google the statistics and if you do your research and read up on these things, they cannot wait to turn 62 because they need that income. They want that money. Even though they know that they're going to get less by taking it at 62. The government says if you wait for your full retirement age, 70, you're going to have more money. You're going to have a higher benefit. Maybe I don't know how much it's going to be, but it's more. But they're like, nah, I don't even know if I'm going to live to 70. I don't know if I'm going to live to 72. Give me my money now. Well, here's what's happening. They don't have enough money. That's why they want that money quicker. Number one, right? They don't have it. Or maybe they saved, but they didn't save in the right buckets. And their money went down with the stock market. Their money went down with taxes. Or life happens because they didn't have a financial foundation house. But guess what? If you got an IUL with cash value, you could delay until age 70. Because now you're going to use your IUL. You could take money out from your IUL to supplement whatever else you're getting. If you have a pension, you have a 401k, you have an IRA, you have money in the bank, you have a Social Security. Like, you could delay your Social Security and use your IUL cash value. And the best part, it's right there. Look at the last sentence. Your IUL cash value does not count towards your earning income threshold. Odetta, what does that mean? Let me break it down, y'all. Let me break it down. So people who are in their 60s, when they realize, okay, I'm getting this Social Security, or I have whatever I'm getting, my pension or 401k or whatever you had, and they realize it's not enough. Now they have to go look for a job. We know this. They're going to work part-time. They're doing a hybrid retirement. They might work 2 days a week, 3 days a week. Why? To bring in that extra cash. But now the government, again, Uncle Sam, which we don't like, but he's in our business, because now you go work that 2-3 days and you're getting income. Now they're going to factor in that income with your Social Security. It's like you can't win. You do or you don't, they getting us. You do or you don't, they getting us. You go get a job, now they factor in your 2-3 days income and recalculate your Social Security. You don't go get a job and you start taking this Social Security earlier, you get less. Because they're going to calculate it with your earning income threshold. People don't know this. So when I sit with clients who are about to retire or will be retiring, my conversation is, hold off on your taking this Social Security. Let's look at other buckets that you have and take those money out first, especially if it's in the bank, not earning anything, right? So this is a big one. 20. 21, safety and certainty on your money. Man, you could sleep at night because insurance companies are stable. They're stable due to state requirements. Every insurance company has to have reserve. So if they're covering 20 million in death benefit, they have to have 3, 4, up to 6 times in reserve to pay out all 20 million and more. And more. It's called reserve. They gotta have reserve, right? You can't just be covering 100,000 people and let's say all of them die and now you ain't got this 20 million to pay out. It don't work like that. Insurance companies are very, very stable and they're state regulated. That says you gotta have 3 times, 4 times, 5 times, or 6 times in reserve. So if everybody dropped dead tomorrow, you could pay out everybody because you have the reserve. You got the reserve, right? That's 21. So when they say, I don't know about insurance, am I going to get my money if I die? Yeah, you will, right? Yes, you will. Okay, let me mute because I can hear somebody. Okay, 22, guarantee on your money that your money will grow. Like I don't care what the stock market does. I don't watch the news. I don't care which company goes under. I don't care if America's at war with Japan and they tax in the goods. Like we don't have to worry about all those things because why? Your serious money is an IUL where you guarantee it's going to grow because we have that floor of 0.75. The cash is going to grow. It's peace of mind. It's peace of mind knowing that when you and I get to 65, we don't care what's going on in the world. Our money is there and you get to watch it because you have an IUL, you log in, right? You log in, you see your cash value, you see your loan value, you seeing it, right? Number 23, we're winding down. Easy access to your money. Oh my God, this is a good one. Easy access to your money. There is no penalty, no 59 rule and a half like the 401k, right? No application to borrow your own money, no credit check, no lending history. You don't even have to pay the money back. See, if I want to go pull out 60 grand out of my cash value IUL, like who do I need to ask? No, I'm not asking. I'm telling you, hey, Transamerica, OdettaKing.com, forward back 60 grand to my account. Who do I need to ask? Nobody. I'm telling them, right? You're telling them. So this is a big one because I've had a client who called me. He had 100,000 in his job account. And I'm going to ask him one day for permission to use his name or even have a video of him telling his story. The wife called me first and she said, XYZ, he wants to take out some money. And we want to know how much cash value he had. By the way, they were saving conservative because he had all this other stuff with his job. So he's like, that's fine. This sounds good. I'm just going to put 500. We did that for about 3 years. So when he called me and he said, I have money in my job, but they're giving me the runaround. I have 100,000 in this account and they're giving me all these hoopla. And then finally they told me I couldn't access this money. So I want to know if I could take 2,500 out of my IUL. So I logged in on the computer. I saw how much cash value he had. I said, yeah. We called Transamerica Tree. He was on the phone. And in 5 minutes, we were off the phone. I'm minding my business, driving around Brooklyn. He happened to see me on the street. He pulled up his car alongside me and he said, oh, Dad, I got the money sooner than you told me. Because we always over promise and over promise and under deliver, whatever the terminology is. Under delivered, over promise, right? So Transamerica told him he was going to have the money in 7 to 10 days. He got the money in 5 days. Super, super, super happy, right? No application process, no lending history. The best part, he doesn't have to put it back. But of course, if you know me, I told him, you better put it back because you still got another 20 years to retirement. So I know you had a situation, but I want you to keep stacking this account. In a couple of months or next year when you file your tax, let's bring it up back, because the more money you put in, the more money you have access to, right? So he understands that. If you're my client, I'm always going to tell you, you better put more money, okay? Because we know cost of living is going to go up. So why are you saving less? Why? Right? 24, you can become your own bank. If you want to put 30 grand in the IUL or 300,000 in the IUL, you can do that. You can do that. I'm in a mastermind right now where I'm learning how to design policies for multimillionaires, and they're not using IUL to save. They're using IULs for taxes because they got a lot of money and they don't want to pay any taxes, right? So we're literally like learning how to fund 500,000, 200,000, $1 million over a 7-year period, all because they're trying to avoid taxes because these people have money. They're not putting IUL for burial or even living benefits because they got enough money for living benefits. Their sole purpose in this mastermind is to learn how to deal with multimillionaires who want to sock away money in these plans for tax and legacy purposes. So again, you could design a policy to take whatever amount. You could design an IUL to put in 10 million a year if you got it, right? If you got it. So on top of it, here's another source. The bank's already doing it. So when clients tell me, oh, Dad, I don't want to put my money in a life insurance. Well, honey, your money's already in the life insurance. It's already in the life insurance, right? Banks are already putting money in life insurance. And here's your source. Google this. And if you say it with me on presentation, you'll see I always love to pull up this website. It's a public website, usbanklocations.com/bank. Yada, yada, yada. It literally tells you Bank of America is at the top of the chart. They're eating the icing in, right? Let me see if I can put my hand on this book. Here's another resource for you guys. Here's another resource. Money, wealth, life insurance. How the wealthy, not the poor people, not the middle class, the wealthy, right? How the wealthy use life insurance as a tax-free personal bank, right? And I don't have time to go through this book, but there's a page, right? I'm going to put the resource. There's a page that shows you the Fortune 500 companies. Think about it. If you're the CEO of Google and you're making 500,000, 700,000, 800,000, what the hell is a 401k? 401k max contribution is 22,500. That's a drop in a bucket. When you're making over $500,000, what is a 401k doing for your retirement? Nothing, right? So wealthy people know about these plans. They love these plans and they stack them up, right? Everybody born in their family get an IUL, right? Because they could stack it up and become their own bank. 25, build generational wealth, right? So again, the wealthy people, they're not using this for burial. They're using this for tax and building a legacy. Taxes and building a legacy. So if you're someone that someday when we're long gone, 3, 4, 5, 6, 7 generation deep, somebody's still walking around with your picture in their wallet. Somebody still got a wall in their house with your picture, even though they never met you. But because you blessed their life, you created something for them, even though you never saw them. That's what I'm doing for my nieces and nephew. I had a conversation with my nephew, Corey. I said, Corey, I'm putting things in place for your kids. For your kids. He's 18. He doesn't understand this. This is how powerful this business is, right? Legacy. So now, the bonus, let's see if you qualify. Now, I'm going to play the devil advocates because I know they're going to say, well, Daddy, you only telling me all the good things. Well, I just give you more than 25 benefits. What? It's a no-brainer. Like, you still want to compare? Like, what else you want to know? Okay. So I'm going to prepare you guys because somebody will challenge you. And somebody will say, well, okay, Odetta, you told me all the good things. I want to hear what's the bad thing. Well, let's talk about the bad things. The cons of an IUL. Number one, not everyone can get it. You got to qualify, honey. If you got lupus, if you got cancer, if you got HIV, if you got certain major illness, sometimes it's not even about you having it, but if your bloodline have it. I have a client that got declined because his dad died from a heart attack. His brother has a heart condition, and the insurance company said, oh, no, we're not messing with you. You're a risk. Like, you got this written all over your bloodline. Like, you got this written over your family history. We're not covering you. This is why when you go to the doctor, on that intake sheet, they always want to know if there's any history. They want to know if there's any history of breast cancer, any type of cancer. They want to know if there's a history. Because if there's a history, there's a possibility, God forbid, it don't show up in you. IUL, not everybody can get it. This is not a bank account where you just gonna give me your social, your banking info, and you got it. No, honey. You got to qualify for it. Not everybody could get it, right? And the few people who don't get it, they're the one that always are the maddest when they don't get it. All of a sudden, they get very negative when they don't get it. I have a kid right now. This is going on maybe like 4 years. When I did his policy, he was one of my very, 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 very first client. He got declined. At that time, he was like 3 years old. The mom was like, what? And I couldn't believe it. That was my first client that was a juvenile, a kid that got declined. But yeah, health condition. 2 years ago, I got another client who was an agent of mine. An agent. We applied for her daughter. The daughter has a heart condition. They said, no, we're not touching you. We're not touching you. Heart condition, right? So not everybody could get it. So that could be a con. It is a con because this is not a free for all. That's why you want to get it as soon as possible and lock it in. God forbid, once you in. Whatever happens after you in, pray to God, okay? Pray to God. You already in, right? That's why I got 3.5. I'm already in. Number 2, this is where some people, they may want to take shortcut. They don't know what they don't know. And because they don't know what they don't know, they may design it wrong, right? They may design it wrong, and then the client may not fund it correctly. So with an IUL, we have to ask clients, what do you really want from this account? Are you going for cash value for retirement income? Or are you going for living benefit? Or are you going for a debt benefit? Everybody is different. Some people may say, hey, I'm already old. I don't really care about the cash. I just want to make sure I have living benefit. Some people who are much younger and still in the workforce, they may say, girl, after you tell me about my 401k, I'm I'm stopping my 401k and I'm stacking this bad boy over here for my retirement, right? So it has to be designed correctly and then also funded correctly. Blessing is on right now, who's one of my agents. We sat with one of her clients who hated IUL, hated IUL. And when I got on the call, I said, listen, I'm not here to sell you anything. I'm here to change your mind. I'm here to educate you. I'm here to show you what woulda, coulda, shoulda happened. Blessing can tell you. When we were done with that client, she wanted a policy. At first, she was like, no, I don't want to hear nothing about IUL. And you know why? The client either did not disclose or be realistic with her goals, or maybe the agent didn't design it correctly, and she funded a lot of money for about 3 years, and she didn't get what she was expecting. So I said to her, what happened there is either you were unrealistic with your goals, or the agent did not design it correctly because you funded it well. You put a lot of money in those 3 years. So and I don't know, I'm just hearing from her side, but then she admitted that yes, she was unrealistic with her goals. And then of course, if she's saying the wrong thing, then it's not going to be designed correctly, right? So if it is not designed and funded correctly, oh well, what's going to happen? The client's going to be mad, right? The policy can lapse sooner while you're still alive. That's the worst thing. You never, ever want to have a policy that's going to show you is going to lapse in your 80s. Like, what if you live until you're 90 or 100, right? So if it's not designed and funded correctly, the policy can lapse while you're still alive. That's no good. That's no good. I don't want to be when I'm 90, I'm still alive and I ain't got no life insurance and no living benefit. I need it then, right? Also, what could also happen is that there's no cash value. What you put in, you're not going to get out. And also, another thing that could happen is you could have high cost of insurance. All of this is due to two things. It could either be on the client part, not disclosing or being fully educated or aware of what their goals should be for this IUL. Or two, it could be the agent who is either premature, they just got started, they just wanted to put some numbers together and present it to the client. I've been doing this for 6 years. For 6 years, and I study this stuff because I love it. I can tell you not every agent is going to do this, right? Number 3, illusion and perception of high fees. I hear this all the time. Oh, well, the fees are high. Well, first of all, make no mistake, nothing is free. Nothing is free. The fees are only going to be high if it goes back again to it not being designed correctly for the goal of the IUL, right? And if we're talking about fees compared to what? Because either way, we're going to have to pay fees. If you saving in your 401k, you paying fees for that 401k, and Uncle Sam is going to get you in the back end. I'd rather pay fees for costs of life insurance. Insure my life, living benefit, income while I'm alive, and ultimately when I die, a death benefit. So again, you're getting more bang for your buck, because either way you're going to pay fees. Do you want to pay fees on your 401k and pay a lot of taxes on top of the fees? Or do you want to pay fees in an IUL and get more bang for your buck? Get life insurance, get living benefit, get tax-free income, all 25 of these benefits. At the end of the day, ladies and gentlemen, there are more benefits than any other plan. So much more benefits. It's undeniable. Nobody could say, no, Odetta, I don't want these 25 benefits. I'm going to stay with my 401k where I'm going to lose money and I'm going to pay a lot of tax. Like, who's going to do that? Who? Right? And with that being said, if you want to invite someone to hear this again, we will be back here next Wednesday for the same thing. And hopefully I'm not going to cry. Hopefully I'm not going to cry. We're going to have this again on Wednesday of next week, August 9th. And the following week, I'm going to be tackling 401k versus IUL. I'm going to show you guys how somebody put in $22,500 in a 401k versus the same $22,500 in an IUL. And let's see what the future look like, right? And with that being said, thank you guys so much. Now, everyone that's on, you guys are going to get a recording so you can play it back. You can share it. If you purchase the book Playground Millionaire, all 25 of these are also in the book Playground Millionaire. So this is also more ammunition for you and your toolkit to educate your client, because now you're also educated and you feel empowered to go out and help more families. And if you're a client on this call, now you have no other question but saying, girl, sign me up, okay? And with that being said, I'm going to stop the recording. Now, if there are any questions, put it in the chat, or you guys can unmute your mic.
Miss Odetta, I have a question.
Yep.